Hello and welcome. Are you a tenant or an owner of a commercial property? Have you been wondering about recent changes in GST on commercial property rentals? Well, in this video, we break down the new reverse charge mechanism, RCM in short, and its implications for both tenants and property owners. So, let's learn about the key changes, how it affects your rental costs, and what steps you need to take to ensure compliance. It all started during 54th GST Council meeting that was held on 9 September. During this meeting, the Council had proposed to bring renting of commercial properties under RCM. This is essentially to prevent revenue leakages. And if you're someone who is new to RCM, we'll talk about this RCM concept in a bit. Now coming back to the meeting, it is against this backdrop that the CBIC on 8th October has come up with a notification introducing this change, and this change is effective from 10th October 2024 onwards. Before we delve deep into these changes, let's first understand what reverse charge mechanism is all about. In GST, normally the supplier is liable to pay GST to the government. Of course, it's collected from consumers, and this concept is widely known as forward charge. For instance, if you buy a pair of shoes from Bata being the supplier would collect GST from you because you are the buyer, and Bata is required to pay GST to the government. But in RCM, the concept is slightly different. Here, instead of the supplier, the buyer or the recipient is liable to pay GST to the government. And this RCM is applicable only on certain specified goods or services. For instance, if you avail GTA services for your business, being the consignor, you have to pay GST unless the GTA has opted for forward charge, because you are the recipient and this transaction is covered under this RCM list. If you would like to know more about taxation for GTAs, you may consider watching the video. The link is in the top right corner. Now coming back to RCM, another service that's been recently added to this list is the topic of today's video, that is renting of any property other than residential property. First, let's understand the meaning of any property other than residential property. Now, residential property would include independent house, apartment, etc. So, any property other than residential property would include commercial property like office, store, etc. Industrial property like factory, warehouse, and so on. Now, let's talk about tax treatment of rental income from such commercial or industrial property before the change. Here, we have two situations. One, when the property owner is unregistered. Two, when the property owner is registered in GST. In the first situation, you don't have to pay GST, assuming that the turnover of the property owner is within the threshold, which is 20 lakh for most states. In the second scenario, property owner is required to pay GST at 18%, and as a tenant, you can avail ITC of it if you use the place for the purpose of your business. To have a better understanding of this, let's consider a scenario. Let's say you are into the business of trading in goods, say light fixtures. So you run your business from a rented place. Let's call this as the commercial property. Agreed rent is 20k per month. Here we have two situations. Situation 1, unregistered property owner. Situation 2, registered property owner. In the first situation, you don't have to pay GST. So total payments that you have to make on account of rent is 20k per month, assuming that no TDS is applicable because it is within the threshold. Coming to situation 2, total payments that you have to make would be rent 20k plus GST at 18%, 3.6k, total 23.6k. You can avail ITC of this 3.6k. If this concept is clear, let's now talk about the change. And the change here is in the tax treatment of rent in case of unregistered property owners. That is, if the property owner is unregistered, so far GST was not applicable, but from now on, as a tenant, you are required to pay GST at 18% under RCM and avail input tax credit if you use this place for the purpose of your business. And remember, if the property owner is registered, then there is no change, so forward charge is going to continue. To have a better understanding of the change, let's consider the same example. But here, situation 2 is irrelevant because there is no change. So coming to situation 1, that is when the property owner is unregistered, now total payments that you have to make would be rent per month 20k to the property owner plus GST 3.6k to the government, and you can avail input tax credit of this 3.6K. Another key change that's worth discussing is availing input tax credit in case of RCM transactions. On transactions on which RCM is not applicable, if you buy goods or services for the purpose of business, you can avail ITC on the basis of your supplier's invoice. Of course, you have to satisfy certain other conditions. But if RCM is applicable, then first you have to pay GST through your electronic cash ledger and then avail input tax credit. So in such a situation, what is the supporting document for you to avail input tax credit? Here again, we have two situations. Situation 1, when the supplier is registered. Situation 2, when the supplier is unregistered. In first situation, registered suppliers would generate invoices and also on the invoice mention that RCM is applicable. So on the basis of this invoice, you pay GST and also avail input tax credit. But in situation 2, invoices generated by unregistered persons have no relevance in GST. So as a buyer or recipient, you have to generate invoice in order to avail input tax credit. This is known as self-invoicing. And as far as self-invoicing is concerned, one interesting aspect is, as of now, there is no time limit to generate this invoice. So you can generate this invoice anytime in the same financial year or after 1 year, 2 years, and then avail input tax credit. Of course, you have to pay interest and sometimes even penalty wherever applicable. But from 1st November 2024, all this is going to change because now time limit has been specified for self-invoicing. And this time limit is 30 days from the date of receipt of goods or services. To understand this better, let's continue with our earlier example. Again, here situation 1 is relevant because self-invoicing is applicable only on situation 1. As per agreed terms, let's say you have to pay rent on 15th day of the subsequent month. So for September 2021, due date is 15th October 2024. And you have to generate self-invoice within 30 days, that is by 14 November 2024. Otherwise, you will have to pay interest at 18% per annum. So if you generate invoice on or before 14th November, then you don't pay any interest, but you can avail input tax credit only in your November GSTR 3B. On the other hand, if you generate this invoice in October itself, say on 15th October, you can avail input tax credit in your October GSTR 3B itself. So you decide what's appropriate for you, and remember this change is effective from 1st November 2024 onwards. To sum up, 1. On commercial properties, only registered property owners are required to pay GST. To put it differently, unregistered property owners are not required to pay GST because such transactions are now covered under RCM. So tenants have to pay GST. And this change is effective from 10th October 2024. 2. Tenants have to generate self-invoice within 30 days, and this change is going to be effective from 1st November 2024 onwards. This was all about recent changes on renting of commercial properties. Hope it was informative. Thank you for watching.